Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at Foot Locker. A lot of you maybe from the 90s, my generation, will remember hanging out at Foot Locker back in the malls. I don't know if that's a thing kids do today. I don't even think malls are really that big of a deal in the age that we live in, where pretty much everything is ordered online through Amazon. It is May 22nd. Let's jump right into the video and check them out. Who we are. If you want to know more about them, check them out www.footlocker-inc.com. That's www.footlocker-inc.com. Foot Locker Inc. is a leading footwear and apparel retailer that unlocks the inner sneakerhead in all of us, right? A lot of sneakerheads I know either order their shoes or get their shoes from Foot Locker. With approximately 2,700 retail stores in 29 countries across North America, Europe, Asia, Australia, and New Zealand, and franchise store presence in the Middle East and Asia, Foot Locker Inc. has a strong history of sneaker authority that sparks discovery and ignites the power of sneaker culture through its portfolio of brands, including Foot Locker, Kids Foot Locker, Champ Sports, WSS, and Atmos. And they don't just do sneakers, right? They do clothing, accessories for men, women, children, right? A lot of workout clothing there. Adidas, Nike, obviously, Air Jordans, New Balance, Hoka. So they are a retailer, as it says. And again, you're probably familiar with them, whether you were an old mall goer like myself from the 90s, right? That was my generation. I grew up in the 80s and 90s. Graduated in 1998, and maybe aging myself, dating myself a little bit here, but I remember them back in the mall days. Like I said, I think they are expanded out into more online presence now. So you're probably aware of the company. Check them out at their homepage if you want to know more about them, or if you want to order some sneakers. We are talking about Foot Locker, ticker FL, out of the consumer discretionary sector. They closed the day out at $27.63, and they were down 8.54%. That is really why we're taking a look at them. Huge drop on the day. I think they had a bit of a drop off last week, and it has continued into this week. That is a massive drop for any stock on one day. 8.54% down on the day. We are talking about Foot Locker, again, ticker FL, out of the consumer discretionary sector. 52-week range as low as $23.85, as high as $47.22. They are definitely closer to that 52-week low, though they do have a little bit more to drop before they get right up against it. Average volume 3.2 million. Today's was 18.8, and it was pretty much a slide right on down from start to finish, just sell off throughout the day. Market cap of 2.581 billion. So they are a small cap company. A beta, not available. So I would say more volatile than the overall market, but they don't list it for some reason, which is odd. Price to earnings, PE ratio is $10.51. This is pretty low, but I'll be honest, I would like to see them go lower. Earnings per share, EPS, sitting at $2.63 per share, and that's pretty decent. Earnings date, sometime between August 17th and August 21st will be the next one. Forward dividend is $1.60 paid out on the year. Divide by 4. They are a quarterly payer. We will see what they pay per share per quarter here in a minute, or do the math. Like I said, divide by 4 here. Nice dividend yield, 3.85% here, but we want to make sure that that is safe. Ex-dividend date coming up July 13th. So if you were to buy them now, you would be in line for the next dividend, and you want to buy them July 12th or sooner to be in. Don't wait till the ex-dividend date. Buy them the day before, so that you make sure that you get the actual dividend on the next payout if you are going to jump into this company now. 1 year target estimate of $38.50, at least according to Yahoo Finance. So they do see some potential upside appreciation in the stock price. And I always say, let's jump in and look a little bit deeper into the company. I like to go into the statistics. One of the things I do is scroll down at the bottom. I'm looking for dividend yield theory to see if they are potentially undervalued. And the way you do that is you here look at their 5-year average, which is 3.26. Compare it to their current 3.85, or up here where it says forward annual dividend yield 3.85. They match. You'll notice that. If it is higher, like it is, that speaks to some potential undervaluation. So this one is potentially undervalued according to dividend yield theory. If this number was lower than the 5-year average, then it would be potentially overvalued. So currently, according to dividend yield theory, it is undervalued. Payout ratio 44.2%. So it is below my threshold of 75% or lower, right? And under 50%, I think, is a very nice dividend payout. That means that they have lots of room to continue to grow this dividend if they want, pay down debt, or in case they had some financial trouble, they would be all right on that end as well. Now, Dividends are paid out of free cash flow. So another thing I like to look at under financials, you'll find the income statement, the balance sheet, and then the third one will be free cash flow. That's what I'm looking at here. Go down to the bottom, you'll see free cash flow. That's this tab. You want growing free cash flow over time because you want the dividend to grow over time, and they pay the dividend out of free cash flow. 2020 was $509 million. 2021 was $903 million. Then it dropped. So nice growth there, but a big drop from 21 to 22, $457 million, and then an even bigger drop from 2022 into their first quarter earnings report here in 2023. Negative free cash flow. Never like to see that. That is probably part of the reason for this drop over the last week or so. Negative free cash flow starts to mean, hey, how are we going to pay the dividend if we don't have the cash flow to do it, right? That's a concern right there. They are repurchasing their stock. That's another one here above that. That's just a little bit of an extra one there that I like to throw in. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. There are a lot of other ones out there. Go ahead and pick some sources that you like. I know like some people like Seeking Alpha. Some people like Google has their own. There's a lot of other sources out there. Just make sure that you are back checking the information so that you can make sure it is accurate. I like this one because they have some stock analysts that have taken a look at this. In this particular stock, 20 stock analysts have taken a look at this. They call it a consensus hold. I would agree. I would agree with them on this, that right now I would not be looking at this one. I would wait for some more things to shake out and watch that free cash flow. In the negative is never a good sign. They have a low estimate of $25, which would be a 9.52% decrease in the stock price. I would actually wait for it to get back to that 23 or even set a new 52-week low, which may be where it's headed. Average estimate of $37. This is pretty much in line with what we saw on the previous page for Yahoo Finance. That would be a 33.91% increase in the stock price. A high estimate of $62, which would be a 124.39% increase in the stock price. All the while, you could collect that 3.85% dividend yield, which is what it is currently. Now, another one, a lot of same information here. You can go into financials. They just present it in a different way. You can go into financials. You can go into statistics. Forecast is what we're looking at here. Dividends, we'll see on the next slide. Statistics, I like to look at return on equity and return on invested capital. That's what this is over here. Return on equity, ROE. ROIC is return on invested capital. I like 10% or better for both of these. Return on equity sitting at 10.50 fits the bill. Return on invested capital, a little low for me, 6.80, but you would also want to compare this to its industry averages. So other companies in the same industry, maybe like a Dick's Sporting Goods, that sort of thing, you would compare what their ROE to their ROIC is and see if they're similar or if this is higher or lower, and that would give you an idea of where they range compared to their competitors. Now, again, another one we want to look at is the dividends. That's what we're all getting paid out of, right? The passive income provided by dividends. So we want to make sure that the payout ratio is under 70, that my criteria is under 75%. Whatever your criteria is, make sure it's under that. The payout ratio, again, 44.69, so it is low. It is below my criteria. Dividend growth, extremely fast dividend growth here, 33.33%. I went all the way back to 21 here. It was 20 cents back in July 21. They raised it up to 30 cents in October of 2021 and then raised it again in April of 2022 up to 40 cents, and it's been at 40 cents ever since. So I would think if they are going to raise the dividend again, it would be probably either in the next dividend or the one shortly after that. But they need to raise it again shortly or they'll lose this dividend growth streak. Again, 33.33% dividend growth. Not saying they're going to continue that, but that is extremely fast, and they are trying to entice you as an investor with that dividend growth, as well as pretty decent dividend yield at 3.8%. 40 cents per share. They are a quarterly payer. Again, they're record date, their last one was April 14th, right? So if you owned them, their ex-dividend April 13th. If you owned them on the day before April 13th, you'll get this next dividend, or would have gotten it. It's already paid out in April there. That's what they're showing you there. Well, that is Foot Locker. If I'm giving you my honest opinion, this is one I've looked at in the past. I'm a little concerned with the free cash flow in the negative. All the other metrics look pretty good. You'd want to do a little bit more of a deep dive. Look at their revenue. Is it growing over time? Look at their debt. Are they heavily debt laden? And look at their forecast. If we are going into recessionary times, which I believe we've been in since about 2019, the only thing that's propped us up is free money in the form of bailouts that both presidents have been involved in, the last two presidents there. So in my opinion, we've kind of been in shaky territory since 2019 whenever we had the COVID crash, but I'll leave that up to you guys. But if we are definitely going into more of a downturn, these potential stocks here, those in the consumer discretionary sector, tend to get hit the hardest, right? People are going to put off buying new shoes before they go without food or pay their rent or pay for their heat and cooling bills or their water or whatever utilities they have, right? This one I would be holding on. I agree with their assessment there, and I would wait and see what shakes out, especially with the free cash flow. That's just my opinion. Take it with a big old grain of salt. You make up your own mind. That's why we call it vested interest. You invest based on your situation, circumstances, and selected criteria, right? This is my investing criteria. If you're interested, you can go ahead and pause this, read through it, right? And again, that is it. Foot Locker. Let me know what you think down in the comment section below. Is it in your portfolio? Do you shop there? Have you ever shopped there? You know, do you shop more online, or were you like me from maybe a different generation where we actually went to the stores back in the malls? Right? Let me know down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join me on this journey to financial freedom. Join the vested interest community, trying to build a community of like-minded dividend growth investors so we can share our experiences, stocks like this one, what we think about them, what's in our portfolio, what we're trying to stay away from, where we think we might see value in the market. That is the idea behind this channel. So like I said, hit that subscription button down below and hit that notification bell so you're notified whenever we put out any new content. Drop me a comment. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And if you want me to cover a stock that you like or would like some more information on, like this one here, go ahead and drop that down in the comment section as well, and I will work that into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing in your for educational and entertainment purposes. Investing involves risk against money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.